Hello friends, in today's video we are going to discuss about two stocks from the agrochemical space, and out of these two stocks one will be a large cap company and the second stock will be a small cap company. So there is going to be a combination. So let's start with our first stock. So our first company is PI Industries, and it is the leading player in the agrochemical space, and it has presence both in domestic as well as export markets. And here you can see company manufactures wide variety of chemicals, and it includes insecticides, fungicides, herbicide specialty product which are widely used in farms across the globe, and it is the biggest producer of generic molecules like prophenos, ethion, phorate in India. And this company has presence all over the globe, so you can see it is present in 30 plus countries and has 4 global offices, and it currently earns 77% of its revenues from exports and rest 23% from the domestic sales. One positive thing is that this company has revenue visibility, which means that the company has a strong export order book valued at around 1.5 billion, which is approx 10,000 crores in INR for the next 3-4 years. So this says that the company has no shortage of work. It has orders to fulfill for the next 3-4 years, which means this company is not going to struggle in terms of its sales, and it can continue to give us good profit throughout the coming years. And you'll see that the quarterly results have also been good. So from December onwards you'll see an increase in the quarterly results, and the profit also is increasing even on quarter basis. And if we see on year, then you'll see that the sales is increasing around 16% in December, 16% in March, and in June 30%, and then again 30% in the September quarter if we do a comparison based on year quarters. And the OPM also has been very good. The company has been able to increase the OPM. You can see it was around 22 in December, March, and then in September it has increased to 24. So in the situation where most of the companies are struggling to keep their OPM at the same level, this company is able to increase the OPM, so which is a very good thing. And if you look at the yearly numbers, in the yearly numbers also you will see an increase. So if you look at the operating profit in March 2020, it was 720, then it increased to around 1000, and then 1150, and now for the last 12 trailing months it is hovering around 1400, which is a good increment. And if you look at the return profile of this company, you'll see that the sales have been increasing at a very good rate, and the CAGR is also very good. So for 10 years you'll see it's around 42%, and 5 years 30%, 3 years 30%, and in last 1 year it has provided a return of 16%. So very good returns. If we increase the horizon to 5 and 10 years, 30 and 40% CAGRs are extremely good CAGR. Now we are at the shareholding pattern, and in shareholding pattern you'll see that promoter holds around 46% and FI currently hold around 16%. Although from December FI has cut their position, but it is still at a healthy percentage of 16%. And in DIs you'll see that DIs were around 23% and they have increased their stake to 26%. So from FIs the holdings have moved to DIs, which is a good thing, and the public remains around 11%. So it's a good shareholding pattern as well. Now we are at the chart for PI Industry, and you'll see in 1 year it has provided around 14% return. And if I change this time to 5 years, you will see a very good return of 250% in last 5 years. And one thing to notice is the consistency. You will see how consistently it is moving up, and if I increase the time horizon to maximum, you will see again the same consistency, that from here you will see it is going slowly in the upward direction, and this is the sign of a good company which is consistently increasing the share price and simultaneously increasing the wealth of their shareholders as well. There are small dips, but those are the opportunity to add more of these shares. So you'll see these shares has given some opportunity to add. Now if I look at where it stands in terms of its peers in this sector of agrochemical, you'll see that it ranks at second place. So first position is with UPL, and if I look at their market cap, you'll see there is not much of a difference. So PI Industry has a market cap of around 51,000 and UPL has a market cap of around 58,000. So the gap is not that much. If this company continues to do well, then maybe in the next few years we will see PI Industry at the top of this table. And the reason why I'm not choosing a market leader, which is UPL in this case, is because of the return. So this company, which is PI Industries, has provided better return than UPL. So here you can see the comparison between PI Industries and UPL. So if you look at 1 year, you will see that it's almost similar, although PI Industries have given 4% more. And if I click on 5, then you'll see a huge difference in the return of PI Industries and UPL. UPL has just provided a return of 60% in 5 years time, and PI has provided a return of 250. And if I change to maximum, then again you will see the gap further widening. UPL has just provided a return of 684 and PI has provided a return of 4600, and this is from 2011 till now. And you can also see the chart of UPL which is the red one, and the chart of PI Industry, which is the blue one, how the blue one is far ahead in terms of return compared to the UPL chart. So that's the reason why I chose PI Industries, and we also looked at the market cap. The difference is also not that much, but in terms of the returns provided by PI Industries are far better, and that's what we are here for, right? We are here for the returns. We are here to compound our wealth. So we have to go with that company which is going to do it more consistently with a much faster rate. So our next company is Best Agro Life. So this is a small cap company with a market cap of only 3700 crore, but this is the fastest growing company in this sector, and it caters to several blue chip corporates and leading MNCs from India and abroad. And this company has connections with multinational agrochemical corporations such as UPL, Adama, Gardha Chemicals, etc. And if we talk about the future plans, then the company plans to launch 3 to 5 new products each year, and their aim is to scale up the exports in next 2 to 3 years. And further to this, their aim is to increase the formulation capacity by putting additional herbicide unit. So they are doing a capex of 25 crore, which shall increase the capacity by 300 crore. So company's future plan is to expand more and gain more market share and increase its revenue, which is a good thing for any company. Now we are at the quarterly results for this company, and you'll see from last 3-4 quarters this company has started giving good results, and you'll see the increase in the sales around 310, 49, 35, 106, and similarly its profit is also increasing at a rapid pace. So 32 in December, and then almost double in March, then again 66 in June, and then now almost 3-folds in September quarter. Similarly, if we'll see their yearly numbers, then in the yearly numbers also you'll see a massive jump. In March 2018 their sales were just 151, but from March 21 you'll see a massive increase. It increased to 905, then 1211, then for the 12 trailing months it's around 1700. And similarly the change in profit also you'll see from 51 to 166, and now it's almost double. And because you are seeing such a good increase in the profit and sales numbers, that is getting reflected in the share price as well. So you will see in the CAGR, 5-year CAGR is 198%, and 3 years is 89, and 1 year is 41. Now if you look at the shareholding pattern, you will see a lot of positive things. One is that from September quarter, promoter holdings are increasing continuously. So in September it increased to 45, then in June again from 45 to 47, and recently as well promoter has done some buying in this company. So here you can see yesterday promoter group have acquired 65,000 equity shares worth rupees 1037 lakhs. So which is again a good thing. It means that promoters are continuously buying these stocks of their company only. So which is a good thing, because promoters are the one who knows about the company, who knows about the future orders of the company, who know about the future potential growth of the company. So if they are buying the stocks of their own company, it means they are confident about the business, which is a very positive sign for an investor. If you look at FIIs, for FIIs also it's around 11%. There was a little dip in June, but again they have increased their stake and they've increased it to 11.27%. So it's a very positive sign as well that in a small cap company with only a market cap of 3700, we have FIIs, and in good percentage around 11% is being holded by FIIs. You'll see the DIs are also coming into this stock, and in September they have increased their holding to 2.57, and you'll see that the stake of public is going down. So from 43 it has come down to 38 level, and the reason is because from the public the shares are moving to promoter, some to FIIs and some to DIs, which is a positive thing for any investor, because the more we have promoter, FIIs and DIs in the company, the better it is for the investor. The more you see public in any stock, that stock is going to be very dangerous, probably operated by the operators also. Now we are at the chart for Best Agro, and you'll see in the 6 months it has given a very good return of 87%. In 1 year it has given a return of 40%, and in 5 years it has given a return of 234%. And it's not even 5, it's just from February 21 till today it has given a massive return of 234% to its shareholder. So as I said, that this company is the fastest growing company in this sector. That's why you see that the share price is also moving very fast. But as I mentioned previously as well, this is a small cap company. So in all the small caps we need to follow that rule, invest very small amount, because when they will start falling, they can easily fall 50-60%. As and when you gain more confidence about this company, you can start increasing your stake in this company by looking at their quarterly result, and once you see that these are becoming more consistent, then you can increase your holding. But initially we don't have to put all our amount into these kind of stocks. So in this sector, if you want to invest and if you want to give 10% of your portfolio to this sector, which is the agrochemical sector, you can also do it by this way, that you can have both these stocks, PI Industries and Best Agro Life. To PI Industry you can give 80% of your amount, and the remaining 20% you can give to Best Agro Life, so that the risk is limited. And if Best Agro continues to perform well, then it will give a boost to your overall portfolio. But in the worst case scenario, if it starts coming down due to any XYZ reason, then it will not have that much of an impact on your overall portfolio amount. So you can follow this strategy of having a combo, one with almost a leader company, the market leader, or the company which is moving very fast, about to become the market leader, along with the fastest growing company, which can be a small cap also, which is providing better return than your leader company. Because there is no point in having the fastest company if it is not able to beat the returns that your leader company is providing or the large cap company is providing of the same sector. Before closing this video, let's look at their chart as well. So right now it is not available at a very good discount. It's just around 7 to 8% discount that you are getting. So you can wait for better opportunity if you want. And as and when you get the opportunity, I will inform you through my videos, or you can also keep these stocks on your radar if you like the company and invest as and when you get the opportunity. Now let's look at Best Agro. Same as Best Agro, it's also not available at a very good discount. It was available here, but from there it has recovered very quickly. So again, you can keep this one also on your radar. As and when you get the opportunity, you can invest in this stock, and I will also keep it on my radar. And as and when we see a dip, I will inform you through my videos. So that's it in this video. We'll meet in our next video with some new information. Thank you.